Sales and rental drops hit property. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I have my stein of coffee and I thought we'd have a look at this article that was shared to me by a viewer from The Guardian. It's discussing, well, renters jumping ship, which we've looked at yesterday, and sales plummeting as the pandemic hits the property market. Now, before we go through this, let's jump over to a great new website I've been looking at. Well, it's not really a new website, but I've discovered the data room at the Property Council of Australia, which has lots of interesting information for property. So we've got the median prices. Sydney's sitting at 910. Melbourne is sitting at 716. Where's good old Brisbane? Wow, we're cheaper than Canberra at 540. And this is from the 31st of January, so we'll have to see. But then you've got everyone else. So this is why when people are saying Sydney and Melbourne are going to take more of a hit than the rest of the country, yeah, I can see that. I can see that. I mean, there you go. I mean, 460, 470, 480, they seem, well, still a bit high for my liking, but I'm a cheap bastard. They seem like reasonable prices. I'm surprised with Hobart going up. But then again, it's beautiful down there. So let's look at the median unit value. Sydney, 700,000 for a unit, guys. A unit. Anyway, and we go to the bottom end, Darwin, 300 grand. I mean, Sydney, I'm surprised the units have any value because of just the triangular fail, all the issues we've had in Sydney, all the construction problems in Darwin, just all around the country. I'm very paranoid about units. So let's see. We can look at the median residential house rents, and this is from the 31st of January, but this isn't going to be the same. We'll have to see. And remember, this is all from CoreLogic, so trust it as you would. But Canberra is the most expensive, $575. Sydney, $550. Then Darwin, $480. Hobart, that's, wow. The average is $454. Then Melbourne, should all move to Perth, guys, $380. So, then again, all the civil servants in Canberra we saw on the other historic charts, just with property, that it didn't really take a hit in Canberra during the recessions. Let's look at unit rents. What's the weighted average? It's $454. Sydney, $525. And Adelaide's the cheapest for the units, $330. The property price index. We can see here where we're going from 2003. It's going up, down, down, up, up, up. So generally up. Australia changed to index year to December 2019 is 2.6%. Top 5 residential transactions. Ooh, I haven't seen this. Okay. On the 14th of March, $8 million for a unit in Sydney, $7 million for a house in Clovelly, New South Wales. 7 million in New South Wales, 7 million in Victoria for a house, 6.3 million for a house in New South Wales. So there you go, guys. I think that's, well, it's a bit of trivia, I would say. And there we go, property value sentiment by index. Look at the residential expectations, that's plunged. Office, look at that plunge. Retail, look at that, crashed. Industrial, whoa. Tourism. And retirement. What does that tell you, guys? And remember, this is it to the 31st of January? No, to June. To June, this data. So, that's a bit of an overview of the property sector. That sentiment has crashed, guys. I think we're going to see that reflected in other parts of the economy. So let's have a look. Renters bail out and sales plummet as the pandemic hits the property market. Fall in migration due to border closures could pose challenge, but market already is showing signs of a downturn. Showing signs the downturn may be brief. Really? Really? Well, let's have a look here. This is foreign investment. That black line represents investment into Australian property. Approved foreign investment in new housing. That means it was over 90% at one stage. A lot of that, I imagine, would have gone into units. So, the pandemic crisis is having a devastating impact on the Australian property market, with sales down by hundreds of millions of dollars and tenants handing back their keys because they can no longer afford their rent. Now, what do you think is more concerning? What do you think will have more of an impact on the long term? The fall in exchanges, or the fact that people are handing back the keys, moving in with family, bunking up, sharing up to save money? I think that'll have a bigger impact. You'll start seeing investors that are so close to the bone they can't even afford to scrape together $100 to keep their property going because they're rent vesting to the hilt. Start to have forced sales. And here's a clip, actually, completely anecdotal, but this was a message sent to me by a viewer. He'd been contacting different agents, asking them for advice about, if he should sell his property, and this is the answer he got. So he asked, I may have a property to sell in the coming months. I'm not getting any capital growth and it's negatively geared. Would you advise me to sell now, as there seems to be an extreme downturn on the horizon? Okay, he sent that to different agents. The simple answer is yes. We think there'll be more downturn to come too, and for those who can, I believe it's best to sell now before they have to consider taking less. The other thing to consider at the moment, there are less properties coming to the market, but buyer inquiry is still higher now than it was this time last year. So better to sell when there's less competition, especially if in 6 months' time we are seeing the market being flooded with forced sales. Here we go. It's other people concerned that when the banks who are getting in trouble, even slightly, they're getting in trouble, when these 6-month mortgage waivers go away and people start having a forced to sell, or when they are losing their rental income, they're forced to sell. And remember, the cash rate is at 0.25%. It's nuts. We're living in clown world. I don't think people have yet felt the financial hardship of what's currently happening. That will come a bit later when the government stops the handouts. I think that agent's right on the money. I think it's, but the question is, will the government stop the handouts? Or will they just keep printing money? So sales values have dropped 85% in Melbourne in the past 8 weeks, according to figures released on Tuesday, equating to a loss of $584 million compared with the same period last year. Sydney sales were down 79, a loss of $454. Westpac gave a gloomy outlook on Tuesday when it announced a $1.6 billion hit to its balance sheet from the virus as customers struggled to meet their loan repayments. It followed NAB's worst case prediction of a 32% fall in prices in the next 2 years. The Frontier UNSW figure, which are derived from publicly available sources such as Domain and realestate.com, chime with a similarly drastic picture in the big city rental markets as the pandemic continues to wreak havoc on the economy. Across all capital cities, rental asking price fell 3.1% in the past week and 2.5% in the past month, according to SQM research. In Sydney's rents were off 3.8% in the past week and 5.2% in the past month, while Melbourne was down 2.5% and 2.6% respectively. But they mask huge falls in the plusher areas such as Sydney's eastern suburbs, where house rents are down 10%, and the CBD, where they are off by 17%. Maybe we'll have to keep an eye on those sectors, guys. Maybe there'll be some opportunities coming up. The president of the Property Owners Association of New South Wales, John Gilmovic, said the rental market was very challenging in Sydney's inner suburbs. In a nutshell, 10% of the rental book is vacant, he said. Some tenants have just bailed out. They've broken their leases and handed back their keys, saying they just can't pay. Others have seen their leases expire and not renew. The under 40s especially are moving back to live with mum and dad. Under 40s are moving. So that's my generation, are moving back to live with mum and dad. Which makes sense. If you're struggling and in trouble, you lost your job, and your parents will put up with you. But I mean, it's a bit different to a 20-year-old under 40. I mean, it's a bit different with me now. We've had all our parents move in with us, so we're at the other end. He confirmed rents had dropped at least 10% and in some areas as much as 15%, leading to a price war between landlords desperate to fill their properties. So we're going to see more incentives. I still haven't seen anything in this article how they're saying that this downturn, which I'd argue is just beginning, is only going to be short. It's that V that everyone's hoping about. Anyone watch that sci-fi movie, TV miniseries V? That was good. Back to the 80s. The discount wars have started. Landlords are offering 2 weeks free rent. They're offering to pay for electricity, for gas, for Foxtel, Netflix, you name it, anything to just get someone in. Netflix. If Netflix and Foxtel is enough to get you in there, see, what you should say is, no problem, give me the money for all of these things. Take that off the rent as well. It will be a golden time for tenants to obtain a cheap lease, but very few people are moving, with inspections often stymied by concerns about viewers coming through properties during the public health scare. Inquiry rates about rentals are down 80%, Gilmovic said. Hits are very low. Very low. People just aren't moving. Lewis Christopher of SQM Research said it was pretty evident that there was a recession in the housing rental market, and one of the main causes was a fall in net migration thanks to the lockdown. The Australian Bureau of Statistics said on Tuesday 538,000 people came to live in Australia in the year of 2019, while 298,000 went the other way, a net gain of 240. But the lockdown and border closures means the number of immigrants will plummet, posing a clear and present danger to the housing market and the broader economy. Okay, that's the problem. Now, I've looked at this. I've looked at our GDP since the GFC. Now, our economy, on a per capita basis, has grown slower than trend. Now, trend is the average. That's what you want to be. You want to be a trend or above. We've been below it for the last 12 years since the GFC. Our economy should have been 10% bigger than it is. That may not sound like a lot, but that's a big impact. And think about it, our infrastructure is struggling to keep up with that population growth. And yet, we're not growing, not as fast as we should. What does that tell you guys? It's a bubble. All the money is going into housing. This is why we're ending up with property prices like this, just shooting up to insane levels. It's why we've got non-uniform growth in the value of properties. This is the example of unit price growth in Sydney. The posh suburbs, where now their rents are falling up to 15% compared to the poor suburbs in the West. And I can say that because I would definitely be in the Western suburbs. No way I could afford on the expensive ones. Christopher said the bulk of population growth is from overseas migration, and that has effectively been frozen. It comes to a screeching halt. So the solution is, guys, have children. Have lots of kids. They're awesome. Sure, they annoy you, but they're great fun. And I may be biased as a father of 5. The chief economist at CommSec, Craig James, said in a note on Tuesday that he expected 240,000 fewer people would settle in Australia this year. Clearly, fewer people living here affects consumer spending for a raft of items, impacts the job market, and also has broad effects on the housing sector, he says. See, this is the thing. Immigration is generally, when you get people over, it's net zero under most economic measures. That's not counting the social and cultural impacts, and then the delay in integration, if at all. There's other issues that aren't usually captured in economic data that can have other economic impacts. But generally, it's considered 0-0 or slightly positive. Because when people come over here, they spend. They spend, but the problem is they also help inflate the property bubble. You kind of need a slower growth rate, maybe more natural, like people having kids. The longer that our borders are closed, the greater the risk that Australia will experience a slower economic rebound than other countries without the same reliance on migration. What does that tell you? It's just a Ponzi scheme, isn't it? They're bringing more people in to just prop up the housing sector. Our economy isn't that advanced. We're not an advanced economy. I'll bring up here, for those of you that haven't seen it, and I'm sure most of you have, but this is the Observatory of Economic Complexity, and this is to do with the complexity of the Australian economy. We're 59th in the world. You have also the Harvard Atlas, and I'll bring that up, and they're ranking Australia at 93rd in the world, unless it's changed. We'll just wait for it to load up. 93rd in the world. So, this is the thing. We need to get a more advanced economy. Because otherwise, we're just propping up one or two sectors. Most of our wealth is in housing, guys. Most of it's in housing. Maybe we should get bonuses. Well, here's the thing. When my father migrated over to Australia, he applied for what was it, Argentina, South Africa, United States. Australia was the first one to respond and take him. They wanted him because he had experience. He was educated. He came over and worked on concrete housing projects using his skills working in precast design for nuclear reactors. So that's the thing. That's the type of people you want to come over. Maybe we need to encourage more people, more nuclear skilled people. Let's get them over here. Let's build up an industry in Australia to get electricity costs cheaper and more efficient. We can dream. Anyway, let's back to this. However, there was some cause for optimism. Here we go. About the wider sales market. Phil Donnelly, Chief Innovation Officer at Frontier SI, points to analysis that showed a rise in last week of positive sentiment about the property market. Who cares? This is what I'm worried about. This is what I'm worried about. Business confidence, business conditions, plunging. Google searches for real estate had also increased. Yes, because people are okay, you can say that's because it's positive, but it's searches. People are expecting the market to plunge. People are looking for opportunities. Maybe people are taking out their super and say, okay, I stuff having that in super. I'll take out the 10 grand. I'll take out the other 10 grand. The missus will take out the 10 grand and the other 10 grand. Boom, 40 grand deposit. Let's go looking. Could that be an example? Maybe, sitting there, maybe I'll get one of those forced sales that people are waiting for. My job's secure. I've got enough savings. I've just doubled my deposit. Could that be it? No. It's optimism. The market's going to rebound. V recovery forever. Everything is speculation. But the Twitter Sentiment Index shows Twitter Sentiment Index. That's a thing. There was also a note of optimism from Steve Jokowiecki, a property analyst at Moser.com. He agreed that prices had fallen, but said it was just froth on the top of the sharp rise in prices since spring. Okay, mate, sure. I'm pretty positive because it could have been worse, and I'm just getting more confident that we will get over it sooner rather than later. There'll be a dip now, but it will bounce back. Why? Why will it bounce back? Is this just hope? They just have hope? There's unemployed people in 6 months' time. It depends. Do you think it'll just bounce back right now if it happens, or is this just hope? Or am I just getting too cynical, guys? Let me know your thoughts, opinions, and perspectives in the comments below, everyone. I think people are taking advantage of being able to access their own bloody money in their super to get into the market because they're anticipating a drop. And if you're buying a house you're going to live in, who cares if you make a loss? If you're going to plan to be in it for 20 or 30 years. Anyway, we'll see. Those Google searches and the Twitter sentiment. What the hell is that? Anyway, guys, thanks for watching. Please like, share, and subscribe. If you're a fan of the channel and you want to support us, there are a few ways you can. You can join the channel here on YouTube, or you can join us on Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and KuCoin for the crypto traders out there. We have the ability for you to send us gold using Gold Pass from the Perth Mint. You can buy a merch from Heiser Says, or you can also support us via PayPal. Thanks, guys. Have a great day, and I will see you in the next video. Bye for now.